to the Me, Myself, and Hopefully You podcast. My name is Tariq, a 19-year-old university student currently experiencing a midlife crisis. Why, you might ask? Because I have no idea what I want to do with my life. So rather than see a therapist, I decided to start this podcast that you're watching right now, and interview and speak to and meet some guests and people from around the world, from an array of different backgrounds. And hopefully, by learning about them and something that they tell me, or their story, or whatever they're an expert in, I can learn a bit more about myself as well. Today is, I think, probably the reason why I started to interview guests, because I want to learn more about, well, I want to learn from people who are older than me, people who are smarter than me, which is like 99% of the population. And sort of, I don't know what the word is, but just prepare to become an adult almost. I mean, I am an adult, I guess, but just be more prepared and learn things that I should have probably learned in school. But the curriculum, for whatever reason, and we'll get to some of those reasons in the podcast, it's not in the curriculum. And so today I'm sat with the founder of Saving and Investing UK, on Instagram, on TikTok, on Twitter. He uses that page, my guest, he uses that page to speak about investing, something that's a bit of a taboo subject in the UK. For whatever reason. In the US, if you want to go on social media, you'll find loads of stuff about investing. In the UK, you probably won't. You're not likely to. And I started investing very recently. And what I realized when I was doing my research is there isn't that much resources out there. But my guest at this time, he started this Instagram page up, this Twitter account, and a TikTok to get more people aware of what investing is. Now, this doesn't contain any financial advice. It doesn't contain what you should invest in or anything like that. But it does talk about the very basics of investing, how we can start investing, why we should potentially start investing, the different sort of areas that you can invest in. We talk about crypto, what crypto is, why crypto is seen as a volatile investment compared to something like an index fund. What does index fund bloody mean? These are things that I didn't even know about a year ago, right? And now I sort of do, but with the help of my guest today, I learned more. So without further ado, I'm going to stop rambling on and I'm going to let the expert take it over from here. Ladies and gentlemen, Jordan from Saving and Investing UK. I nearly screwed up that name. That wouldn't have been very good. So, Jordan, I want to start off with some quick fire questions just to get to know you a bit more. My first quick fire question is, what is the last thing on your camera roll?
One second. The last thing on my camera roll. That's an interesting question. The last thing on my camera roll is a screen recording of a live talk sport show I was watching last night that I decided to send to my friends.
What was what were they talking about?
So it's just a clip about the England squad for the next game, and who they'd like to start. And the one caller was getting all the names wrong. So I just had to screen record that and send that to a few of my friends.
That's brilliant. That's like that. I don't know if you've ever seen the that video of I think he's Nigerian, the Nigerian TV presenter, and he gets all the names wrong. I don't know if you've ever seen that.
Yeah.
It sounds like that. That's brilliant. What do you make of England's game so far?
Yeah, really, really good. Obviously, it's good to be through. It's good to have 3 clean sheets. Hasn't been too entertaining in terms of attacking football, but I guess that's what we've come to expect with England. I'm just looking forward to seeing what we do against one of the big boys, against Germany.
Yeah, what's your prediction? Also, do you mind just speaking up a bit louder, because I'm just struggling to hear you a bit. It might be my headphones, but yeah.
Yeah, one sec. Let me try and get a bit close. Yeah, so it's going to be difficult. It's going to be really difficult, but I do think we're probably in a better position than we've been in a while to face Germany. And I'm not sure if we're the favourites, but I'd imagine we're up there. So I'm feeling quite confident. Hopefully we can pull something out.
I think on paper, and obviously on paper it doesn't really matter much, but on paper this is the worst German side we could have faced in recent years, and the best English side that we've got in recent years as well. So I feel like this is the
Yeah, I definitely
closest
agree.
thing we can get to beating Germany, because that year in 2010 when we lost against Germany, I think it was 4-2 or something. It was the Lampard goal that should have stood, but
Yeah,
it didn't. That was a solid German squad, and when I look back at the team, I thought we were okay, but we were nowhere near as good as Germany, and we probably did deserve to lose in terms of quality. But I think right now we're a bit closer in terms of squad depth, but also just starting 11 pound for pound. We're a lot better, and I think I'm quite optimistic. I've said this whole time, like genuinely, wholeheartedly, I think we'll get to the final. I think which is it's really stupid to say on a podcast, but I do think we will. I think we've just got the team for it. I think everyone's underestimating us, which is perfect. I think everyone's underestimating Southgate, which is even
yeah,
better. And I think we'll end up edging it. Either that, or knowing England, we'll end up beating Germany like 1-0 or 2-1. Or imagine we beat them in
mm,
penalties. If we beat them on penalties, it'd be better. And then we lose against Ukraine or Sweden, which is who we would have in the next
yeah.
round. It would just be
That'll
typical.
be about right.
Yeah, it
Yeah,
would be.
yeah,
It'd be hilarious.
definitely.
Who do you support in terms of club level?
I support Arsenal,
Or do you?
unfortunately.
Oh,
Yeah, what
all
about
right.
yourself?
Oh yeah, I saw I saw you posted about when you invested in United. Yeah, I forgot about that. We'll talk about
Oh
that
yeah,
later as well.
yeah,
Yeah, that's
yeah,
yeah, because I support United, so like I'll say it right now on behalf of all the United fans. Thank you for helping us buy Sancho, because it seems like the Glazers don't want to spend an extra £5 million, which is literally nothing to what how much they have, on buying
yeah.
the guy. It's the most frustrating thing in the world. But I mean, I guess being an
That
Arsenal fan,
saga has been
that's
going on. Yeah, definitely. That saga has been going on for 12 months plus. I don't think I don't know, these deals in football they do take time. They take years in some
but but
cases.
this one is such a like it's so annoying because it's literally 10 million quid. Last year it was 20 million quid, which they ended up spending that on Ahmed Diallo, who's like a 19-year-old unproven kid. So they could have just spent the 20. I don't know what they're doing, but yeah, we'll get into
Yeah.
why you why you were investing in United yesterday. I was actually really interested in that. My next quick fire question to you is: who would you consider as sort of a role model in your life?
Um, that's a good question. That's a very good question. In terms of an actual role model, someone who's sort of taught me, I'd say, sort of basic human values, how to speak to people, how to approach people, how to talk to people. I'd say my mum and my dad have been sort of big, um, big focal points in terms of the way that I've learned how to present myself, if that makes sense, like my mannerisms and stuff. So I'd say in terms of like personal habits, them two are the two biggest influences. Um, I really like entrepreneurs. To be honest, I like a lot of like entrepreneur motivational stuff. So people like Jeff Bezos, like Elon Musk, have always sort of grabbed my attention. And just going back to sport briefly, there was one person I did look up to. I did think who was at the top of the game, who sort of inspired me to work hard and just to try and get to where I want to be essentially. And that person is Thierry Henry. So
Okay.
in terms of, I'd say in terms of the personal values and my values, I'd say my mum and my dad have helped implement them. In terms of my work rate, I say Thierry Henry has helped contribute towards that. And then in terms of sort of my entrepreneurialism, the way I've been able to sort of create different projects, I'd say I look up to people like Jeff Bezos and Elon Musk in that regard.
Okay, so you've got sort of a wide range of role models for different sort of areas. I feel like a lot of people are like that. Thierry Henry's an interesting one. What would you say sort of got you? Is it just because you sort of you really enjoyed watching him? Because I never
Yeah,
watched football when Thierry Henry was playing for Arsenal. Um, I watched football a little later on in my life.
yeah. So I think the thing with the football, probably the link with Thierry Henry was because I was quite young at the time. Sort of when Thierry signed for Arsenal, I must have been, I think, sort of 3, 4 years old. But it was the years after that that I began to get induced into football. Basically, I started to really get passionate about football, and he was probably the biggest focal point for that. And I'd say at the time, football was the only thing that I really felt passionate about. Obviously, being quite a young boy, I didn't really, I wasn't into too much. So football was the sort of the first thing that come along and sort of showed me that, look, there's something here for you that would interest you, that can capitulate you, that can leave you emotional every week. And yeah, that was the sort of first thing that I really sort of had a passion in. I sort of really enjoyed watching and enjoyed talking about.
He was meant to get a job, wasn't he? He left his current his previous managerial Bournemouth. That's who he was meant to go to. He was linked with Bournemouth for a few weeks, and then he ended up leaving. I think it was one of an MLS team, and then everyone thought he was going to Bournemouth, and then he never did. I just realized that when you were speaking about Thierry Henry. Yeah, do you reckon Spurs will go in for him, because they seem to be going in for every manager and getting rejected by them all? I think it's hilarious, to be honest.
I hope they do go in for him, just so he can tell them where to stick it, essentially. But
What
yeah,
if
it
he's
does appear that everyone's turning down Tottenham right now.
I know. Do you know what? Oh, what happened? Hello? Don't know what happened. One. So we were stopped there a little, just some minor technical difficulties. But we were talking something about Tottenham getting rejected all the time. And what if Thierry Henry accepts the offer and becomes Tottenham manager?
I don't think we can bet on that. I don't think that will ever happen.
No, you never know, man. You never know. I
guess you never know in football, but at the same time, I would be horribly shocked if that were the case, if that were to happen.
There's a part of me that thinks it would be more embarrassing for Tottenham than it would be for Arsenal.
Yeah, potentially. That's a good point.
An MLS manager, having been rejected by everyone else, is now the manager of one of the Super League teams. That's the crazy thing. Like, Sevilla's chairman just came out and said that Lopetegui, who's the former Real Madrid and Spain manager and currently Sevilla manager, rejected Tottenham. I'm thinking these offers that Daniel Levy must be giving them must be so bad, because everyone's like, these managers that I've never heard of before are saying no to Tottenham, and you'd think surely they'd be getting a better wage at Tottenham. It's a chance to be in the Premier League. Like, yeah, you know, at this rate, they'd be asked. They're gonna
with all the money in English football, you'd expect them to be.
Yeah. Surely they would. It's been what? I don't even know how long it's been. When did they sack Mourinho? Like 2 months ago? Something like that.
Something crazy. It's been a long time.
Yeah, and I can't believe it, because they were going to get that Fornesca guy from Roma, or he was at Roma. And then, you know what I found interesting though, is they only approached at the beginning. They were only approaching managers that had already left, so that they wouldn't have to pay the club anything. They would, because you have to pay a fee when a manager goes.
Yeah.
So I was like, Levy's such a stingy prick. He's so stingy. His co-owner is one of the richest people in Britain, and I don't understand. They made the biggest mistake with sacking Pochettino. Anyway, we're getting too much into football. This is meant to be an investing podcast, and I've not even gotten through the first 3 quick-fire questions. My final quick-fire question is: say if there was a house fire, yeah, and everyone made it out, and everyone survived, and your phone and your dying laptop also survives as well. What would you save? What would you keep?
What, in terms of additionally?
Yeah.
Okay.
I'm not going to make you choose between the parents.
Is it just one item?
Yeah, just one.
Okay. Aftershave.
Aftershave?
Yeah.
That's how you know you're young, man. Everyone else gives... Okay, I'm going to let you explain that. Why aftershave?
There's just something about smelling good that just... I don't know, when you approach people and you speak to people, when you're smelling good, I don't know, you get the results. You get what you want, I think. I don't know, and I feel so much more confident wearing aftershave as well. I think if I was to step out and go and... Obviously, after a fire, you'd have to speak to somebody about something. And I just feel so much more confident if I was smelling good
Bit of aftershave.
and looking good as well, but smelling good to start with.
So
That would probably be my one thing.
Your mum and dad are screaming, Jordan, get out of the house, get out of the house. You're only allowed to just take as many things as you can, and the only thing you can carry is one thing. And you bring the aftershave. You know, your mum's got the water, your dad's got the food, and they're like, Jordan, what did you bring? What did you bring? Oh, mum, I bought aftershave.
Yeah, basically, if you save the laptop and the phone, you've saved a lot of my life already. So there's not really much on top of that that I care too much about, if that makes sense.
Yeah,
So
that's a lot of people said like laptop and phone all the time with the
yeah,
questions. So I was like, you know what, I'm gonna let you save because everyone normally has their laptop and phone with them, and I feel like most people, the first thing that they'd save is their laptop and their phone. Like that's
yeah,
like the
definitely.
biggest one, and it's like one like your phone's in your pocket, grab your laptop in one hand, you've got another hand. What are you gonna be able to save? That's the weirdest one, and that just proves. I mean, I didn't know how young you were. You're the same age as me. Which, by the way, you got a solid beard for your age, man. Like, fair play to you.
So have
I'm
you?
assuming you're 19.
No, I'm 25.
Oh, you?
Yeah, I started uni a bit
Okay.
later.
You started
Yeah.
uni late then? Okay.
Yeah.
See, that explains it then. Okay, so I take that back a bit because I thought you were like 19, 20 or something.
Yeah, no.
I wrongly assumed that you were 19 because you're a first year. Oh, that's sick though. That means you. So why did you go into uni? Why did you decide you wanted to go into uni?
So obviously, initially, I went to sixth form. I did that whole academic route, but then after that, I decided to go for an apprenticeship. I wanted to just get out and earning money sort of as soon as possible, and I wanted to be in that environment, if I'm completely honest. But it wasn't until a couple of years ago that I actually thought about going back to full-time education to try and learn a skill, essentially. But yeah, I just wanted to get out to start with and start working, and then as it turned out, a few years later, I wanted to sort of knuckle down and get us, because I did it the wrong way around, essentially, but it was the way I wanted to do it, if that makes sense. So I'm happy with all the decisions I've made. I don't regret not doing anything or doing something. But yeah, it's just the way things work out, I guess.
Yeah, dude. No, I always rate it when people say that they go to uni later on, because it's a lot harder, I think, to go to uni later on than it is when you've just finished sixth form. It's like easy route is go carry on with the education and get it done in one go.
Yeah, you're still in that sort of education bubble, aren't you? I guess.
Exactly. Yeah, it's easy just to transition. Obviously, it's not easy, but it's a lot easier to transition into university because you've been in education, and then obviously going into a job after that. But with your situation, you were in a job, apprenticeship scheme, etc., and then you decide, you know what, now I'm gonna take a few steps back almost and go, I want to go into uni and I want to try something else. So fair play to you. I mean, and you're doing accounting as well. But I mean, we got a little bit about you there from that question. But could you just quickly sort of explain sort of what we're going to be talking about today, and maybe even explain a bit more about yourself as well?
Yeah. Okay. So yeah, my name is Jordan. I head up Save and Invest UK, which is found on Instagram, Twitter, and TikTok. We're currently pushing out content most days, and I'm just trying to grow the page. But the whole idea of Save and Invest and why I started the brand was to help people in the UK to get into investing, because I know it's a topic that is stigmatized, and I know it is one. I don't know if it's a topic that is not covered as much in the UK as it is in other countries. For instance, in the US, I think 55% of people in the US invest in the stock market, whereas in the UK, the figure's between 10 and 15%. So just trying to raise awareness of investing, explore the benefits, and try and get as many people involved as possible.
How did you sort of get into the world of investing then? Because like you said, it is a bit of a taboo subject, but also just something that no one really cares about. Which I think partially that's because our welfare system is a lot better than in America, and Americans sort of feel like they have to invest if they want to make any sort of money, which is good in terms of being in the UK, but also it just means that we have no idea about sort of investing. So how did you get into it?
Yeah, so I initially got into investing in 2017, but it was for the wrong reasons, to be completely honest. I jumped on the crypto bandwagon. Bitcoin and Ethereum were dominating news headlines at the time. Bitcoin was valued at, I think, somewhere just below £15,000, which was remarkable from where it actually started, which was less than a pound. So it was dominating news agendas. It was dominating sort of my friend circles. All my friends were speaking about it. And then it was a conversation with a couple of my friends about a new altcoin. Pure gambling. That's all we were doing. We were speculating. We were gambling. That's what it was. But I managed to get involved in that. And then within weeks of putting money into it, I think it was up, 4,000%.
Wow.
So my £200 turned into literally £8,000. In a few weeks. And at that moment, I thought, hang on, I might be onto something here. Obviously, not knowing, I didn't have a great deal of education behind me about crypto. I knew what it was and I knew how it worked essentially, but I didn't know too much about the fundamentals of it. So I then began investing in other altcoins. I then started putting money into Bitcoin and Ethereum also. And then a few months later, we experienced the 2018 crash. So everything just went shooting right down. And then it was at that moment that I looked at more conservative investment tools. So I looked at investing in individual companies and then eventually index funds. And then once I found out about index funds and compound interest, I was hooked in the world of investing, especially in stocks and index funds, to be completely honest.
It grabs you, doesn't it? It's like, when you start, you can't stop.
Yeah, exactly.
That was my story was very similar to that in terms of how I got into investing. Just because
and everyone who does start always regrets not starting sooner. That's one thing I've come to.
Which is mad because like sort of I'm 19, you're 25. You'd have been 22 when you started roughly. When you started with crypto.
Yeah.
So and that's still ridiculously young. But even then, I sometimes I should have really started. Well, to be fair, I should have started earlier, and I could have started earlier, and I'm fuming about this. So it was about 2014 or 2015 where I'm really sort of into sort of knowing about the news, and I'm always trying to keep up to date with it, into politics and whatever. And there was this sort of thing about cryptocurrency, and I thought, what the hell is this? This was before anyone was talking about it, like on the level that everyone seems to know about it now. Like, you know, the guy next door seems to just know everything about crypto apparently. So this was right at the beginning, and I was seeing it in newspapers, not even in British newspapers, in sort of like Chinese newspapers that had been converted into English ones or whatever. And I thought, what is this? It doesn't make sense to me. I didn't understand what it was. I understand a bit more better what it is now. And so I asked one of my teachers and I said, Miss, what's cryptocurrency? And she explained it to me. And I thought, she doesn't know what she's talking about either. So I asked a few other teachers and they were like, oh, I think it's this and I think it's that. And I thought, all right. And if I just basically made the step and gone onto a computer and looked it up and looked at how to invest, I know for a fact that in 2014/2015, I would have invested in it. And it makes me so annoyed because I knew about it and I never did anything about it. And I should have done it because if I invested in 2015 when I knew about it, then, oh man, I still get so, because this was before anyone was talking about it. Like this, I wouldn't call, I'm not smart, but sort of, I like to, like I said, keep on top of the news. So this was just a random question in the middle of lesson where I was just like, oh, Miss, do you know what this cryptocurrency thing is? And she tried to explain to me, like I said, and she had no idea. And even the other teachers that sort of I respected because of their sort of knowledge on things outside of their own subject, they were like, oh, I'm not really too sure. I'm like, well, if I can't, and at that age, I mean, I was only in like year 8 or something, or year 9. At that age, you think your teachers know everything. And so I'm like, if I can't get, and that your teacher is the only reliable source of information. If I get it from the internet, it won't be true. It won't be reliable. So I thought, all right, I gave up on it. And it's only literally in the last year or so that I've actually invested in crypto. Before that, mine was actually the opposite to your story. I invested in a mutual fund first, then an index fund, then I invested in crypto. It was yeah. So it's like the opposite sort of to yours. Anyway, we're talking about all these words, right? And we've taken ages to get to this point, but you know, it is what it is. this is a podcast. I want to sort of, in this episode of the podcast, I want to talk about the basics of investing, and sort of how to get into it, of what to get into, what's the best way. And I want to sort of segment it into two parts. I want to first just quickly discuss crypto, I guess. I mean, because like I want to focus more on the conservative sort of investment routes because they're a lot safer. And then I want to talk about the routes, you know, the index funds, mutual funds, the differences, how do you get into it, etc. So first things first, how would you sort of define cryptocurrency to someone that has no idea what it is?
So I would define cryptocurrency as a highly volatile digital asset.
Okay.
That's that in a sentence. That's what I would describe it as.
What do you mean by, why is it so highly volatile? What do you mean by that?
Because right now we're going through sort of a sticky stage. I mean, crypto is sort of treated as like a startup company, essentially. So people aren't really sure what to believe with it. Obviously, governments are trying to ban it. Some governments are quite accommodating of it. For instance, El Salvador has just passed it as legal tender in that country. So, and then you look at the contrast on the other side. You look at China trying to ban it everywhere, and to be honest, I don't really keep up with all of the countries that are trying to implement legislation to try and ban it. But I'd assume it's probably more common than it is uncommon, if that makes sense.
Yeah.
But yeah, it's hugely volatile because it's not really backed. It's got nothing sort of supporting it. It's his own asset out there on its own, essentially. And yeah, it's a weird one because the risk is adverse. So the risk is different to the risk that index funds or real estate poses, in terms that they are affected by sort of the stock market and the housing market. Crypto is its own market, essentially. And usually when stocks and real estate are doing badly, crypto is doing quite well. And the same can be said for when crypto is doing quite well. Crypto is doing badly, stocks and real estate is usually doing quite well. It's not an asset class that I would encourage people to invest in. It's not something that I would definitely say you need to put money into crypto. But it is something that interests me. It's something that excites me. It's definitely something that could be in the future. It could definitely be here to stay. And yeah, it's an interesting asset class, which is why I hold a small percentage, but only a small percentage. So yeah.
Yeah, no, I'm the exact same as well. So there was a point where I wanted to invest a lot, especially for my age, and especially considering I've only ever really had part-time jobs. I wanted to invest a lot of money into crypto, and then I started thinking about it, and I started, you know, because crypto is almost like you said, it is like a startup essentially. And so if you're someone that hasn't invested before and you're thinking, well, what do I invest in? And you're looking at crypto as one of the sort of one of the things that you might potentially invest in. Crypto is, like you said, it's like a startup. It's brand new. You don't know whether it's going to be really successful. You don't know whether it's going to be a complete failure where you lose loads of your money. There has been many situations in the past. I know you recently spoke about Football Index on Instagram about how that collapsed completely, and people lost thousands of pounds. And there's been other examples as well in the past that people have lost so much money because they've invested in something, to use the word volatile, you know, like you said, invested in something that's volatile, something that can go up or down, sideways, whatever. And it's just not the safest route. And again, this isn't financial advice, obviously, because I'm a nobody. You know, Jordan's still young. Like, we both relatively don't. I mean, Jordan knows a lot more than I do, which is why I've got him on. But you know, we're not expert investors. Crypto is like the last thing you almost want to invest in. And if you do invest in it, you don't really want to prioritize it. I feel like it's not something that I prioritize in terms of where my money goes every month. Just because, like you said, how volatile it is, and how sort of, oh, it could go up, it could go down, sort of thing. I don't know if you agree with what I'm saying there, or if you sort of.
Yeah, definitely. I echo exactly what you're saying. Yeah, again, it wouldn't be my go-to in terms of investing. But again, I can see why people do. But in my opinion, it's probably a bit more of a gamble than it is a long-term investment. But that being said, with investing, who knows? Who knows?
I mean, there was a book that I read. I can't remember what it's called now. but the book said something like, it was a book on investing. I don't even think the book was actually a reliable investing book, to be honest, now that I think about it. The author was basically said that you can't, the minute your barber starts telling you about a certain stock, the stock is already ready to go down. So basically what I mean by that is everyone seems to be experts on crypto. Everyone's saying, buy crypto, buy Bitcoin, buy Dogecoin, buy whatever coin, all this other stuff. Everyone's buying into it, which probably means that the people who hold a lot of it are starting to let go of it, are starting to think, oh, now's my time to get out of it almost, because everyone's buying into it whilst it's going up and up and up. And obviously it's going down now because it's being extremely volatile right now for a lot of different reasons. But signs, there's just things that sort of suggest, I don't know how to really explain it about when it comes to investing in crypto, which is why I only want to talk a little bit about it. You mentioned about what your go-to, how crypto wouldn't be your go-to thing that you'd invest in. So let's say you got someone brand new, right? He's never invested. He's a good friend of yours. He's never invested in his life. What are you sort of telling him to do? Are you telling him to go Forex? Are you telling him to go stocks? Are you telling him to go somewhere else? What are you telling him to do?
Okay, yeah. So my advice for a newbie investor, whether it would be my friend or someone else, would be firstly to look into index funds. I think index funds are a very underrated investment tool. They give you exposure to lots of different sectors, as well as lots of different countries in some cases. And they are a lot lower risk than investing in individual companies and investing in startups, obviously, which are, again, highly volatile. Yeah, my advice would be to look into index funds. I do like mutual bonds as well. I do think they might have a place in someone's portfolio, just depending on how much risk you want to take. Obviously, they're a bit, I would say, lower risk than investing in the stock market, investing in index funds. Bonds are generally seen as more safer investment tools. But that being said, I currently don't hold any mutual bonds. I am mainly index funds and then a small percentage of stocks. But for any newbie investor, any beginner investor, I would definitely recommend looking into some of the most popular index funds, just to get that sort of diversification and that exposure, just to ensure that a person isn't going to lose money, essentially. I mean, investing in the stock market, in the short term, you're more than guaranteed to lose money, but in the long term, you're probably going to make a lot of money. So in terms of index funds, they're hard to beat, they're low risk, they're low fee, and a brilliant place for any beginner to start, in my opinion.
Oh, so what do you mean by, what does it mean when you say invest in an index fund? So what do you mean by investing, and then what is an index fund essentially?
Okay, so when I use the term investing, investing just means to put money into something with an expectation that it will go up in value. So when you think about investments, you can think of obviously houses, you can think of crypto, you can think of stocks, index funds, collectible cars, collectible Pokemon cards, vintage wines. I mean, these are all things that would be classed as an investment. But in terms of the actual investment itself, the index fund, I would say in terms of diversification, it comes with a lot of exposure to different areas of the stock market. So that, again, like I said, is lowering your risk quite a bit. And yeah, index funds, I'd say the best place to start for me.
Okay. You also mentioned sort of with index funds that there are sort of different, well, there's some that are really good, and you recommended people to maybe check out the ones that are really good. How would you go about sort of investing in these really good ones? What do you do? Because you can't just sort of go somewhere. It's not like you go to a shop and you just buy it. Like everything's sort of online now. Where are you going? Because that's sort of one of the struggles that I had when I started investing. Because I was like, right, I want to start investing. What do I do? So I went online and I started typing how to invest, and everything pretty much came up, like American sort of stuff. And it took me a long time. Like it took me a year, probably a year and a half until I actually, from when I started thinking about investing to actually investing. It was actually at the beginning of lockdown that I invested, because I had all this free time, so I could actually do more research. So like, how are you investing? Are we going on these apps? Or what are you sort of doing? I know these are really basic questions, but that's what I want to sort of get out of you, at least right now.
Yeah, that's fine. So an index fund to start with, I just want to break down what an index fund is. I think you did ask me that, but I missed out the last answer. But an index fund is essentially a fund that tracks an index. So when we look at different indexes, we might look at the FTSE 100, which is the top 100 companies in the UK, the S&P 500, which is the top 500 companies in the USA. And then you've got global indexes such as, I think FTSE do a global all-world tracker, essentially, and that tracks global countries, so countries from different countries all around the world, but also different sectors. And an index fund just tracks a particular index. So for instance, the S&P 500, which is one of my favorites, that actually, if you buy an S&P 500 index, you're essentially buying into the top 500 companies in America. So your Apple, your Amazons, all the big players, and that list of 500 companies is forever changing. So in 20, 30 years, there'll obviously be 500 different, well, not a brand new 500, but there will be new companies added into that 500. And if you buy into the index fund, that automatically updates. So you're always getting that same level of exposure, if that makes sense. And obviously when the index fund tracks that index, it's supposed to mirror the performance of the index. So the S&P 500, for instance, I think has averaged just over 10% annual return since its inception in 1926, I think. But yeah, so there are some quite consistent gains with indexes in index funds. But the way to go about investing in index funds, so first of all, you would need to find a platform or an investment broker, essentially a stockbroker. And there are lots of different ones about in the UK. I know Vanguard's a popular one globally, but we've also got Hargreaves Lansdown, AJ Bell, and there are some commission-free apps such as Trading 212 and Free Trade, which have become increasingly popular given the low fee, the commission-free status. And you can invest in index funds on any of these platforms. They're traded often as ETFs, which means they are exchange-traded funds, which basically just means that they're easily accessible for an individual. You don't have to, you can put very little amounts of money into it. You can buy them sort of Monday to Friday when the market opens. And they're just generally a lot more easier to get a hold of. But yeah, you can buy them from sort of any established investment platform. Any investment broker will know about index funds. They will know about some of the more famous index funds, and I'm sure they will be able to point you in the right direction. But any sort of investment platform will do, essentially.
So what are you sort of, again, just to sort of reiterate the question or change up the question here a bit. So let's say, for example, we'll use Vanguard as we'll use Free Trade and Trading 212 because they seem to be on the rise because of their low commissions. What are you sort of doing to invest in these? Where are you going? Are you going are you just typing in Trading 212, so making an account, and then boom, you're sorted? Or how is that working? Is there sort of requirements you need to have, like you need to show passports and stuff like that? Hello? What happened? Is he gone? Hello?
It's quite easy to invest in.
Hello, Jordan, can you hear me?
Invest in this country, you need sort of, I think, a minimum deposit of £1. 1 second, sorry, the connection dropped, I think.
Yeah, it did.
Can you hear me okay?
Yeah, can you hear me, Jordan?
Yeah, I can, yeah.
Yeah, it sort of went completely, you went silent for quite a bit. So can you just start that answer again? Sorry, because it basically just froze out after I'd finished my question.
Yeah, no worries. So to start investing, you will need obviously your personal details. In some cases, you might need a form of ID, but not always. a lot, very common with sort of trading 2 and 2 and free trade is the minimum investment of, I think, £1. So you only need to put £1 in to start investing, which is contrary to many people's beliefs when they think that you need lots of money to start investing. But yeah, most apps, so you can, I think under £100 will cover you on probably 95% of platforms. You'll be able to start investing on any of them with that sort of money. In terms of passports and ID, that's not really required. There is usually a form you need to fill out if you want to start investing in American index funds and companies, but that takes sort of a minute, if that. So it is really easy to get started. All you need to do is sort of download the app, sign up to one of these platforms, type in your details, type in obviously what how much money you want to deposit, how much money you want to put in, and then set up some sort of automation. And then yeah, you're really away. The main thing is obviously to research. I think that's the hardest thing about investing, is knowing what to invest in, what to look for, and how to sort of monitor how successful an investment might be. But in terms of actually starting on a platform, I think that is one of the easier things. I think technology has made it really easy now. Anyone can do it from their phone, from their laptop. So yeah.
Brilliant. Yeah, 100%. It definitely is sort of the easiest. It is, weirdly, once you get started, then like we sort of mentioned earlier, you do get hooked and you are doing a lot more research on things because you realize, oh crap, this is my money. I need to make sure that I know where I'm putting it.
Yeah, exactly.
So this hypothetical friend of yours, right? So he now knows what investing is. He knows that he wants to potentially invest in index funds, mutual bonds, funds, whatever. He's made an account with one of the platforms. How is he going about doing the research? What is he looking at? Is he looking at past performance? What is he actually specifically looking out for? How is he doing some research on different index funds, I guess?
Yeah, good question. So firstly, obviously you want to research what the actual index fund does, what it tracks, what it looks at, and just see if that's something that you want exposure to, essentially. So first of all, first step, get to know the index fund, get to know what it's investing in, essentially, where and what sectors. You then want to look at sort of, in terms of your investment strategy, what you want to invest in, the sort of returns that you want, and the sort of risk that you're prepared to take. Because, for instance, some index funds might be seen as more risky than others. And also some of them have more exposure than others, which obviously reduces the risk in itself. But yeah, so looking at those sort of things, past performance is good to look at, I believe. I don't think it always indicates future performance, but past performance is obviously a good sign. You want a good track record, essentially. But you also want to know that the company is going to be good going forward, and that goes for individual companies or an index that tracks a group of companies. You want to know that obviously the growth in that country or in that sector is there to be had, essentially. But just doing basic research on, like I said, the type of investment, what it is invested in, and whether it's something that you believe in. I think if you could ask yourself those 2-3 questions and you can answer them, then I think an index fund will be perfect for you.
Yeah. So we've spoke about sort of different index funds already. I want to get into sort of now, like sort of individual stocks, because that's sort of a little different to sort of index funds. I would argue it's a lot riskier, because it's sort of just on one company. Whilst if it's the S&P 500 if it's the S&P 500, for example, that's 500 different companies. So you've got more margin for error. While one company, that's sort of, you're putting money into that entity, hoping that it's going to do well. How are you going about doing that? Is it on the same platforms? Is it on different platforms?
Yeah, so if you want to invest in individual companies, you can do that pretty much the same as index funds, the same places, the same providers that I've listed: Vanguard, Hargreaves Lansdown, AJ Bell, and Trading 2 and 2 Free Trade are also good ones. But yeah, you can invest in stocks pretty much anywhere. You can invest in index funds and vice versa. But with stocks, as you said, I would like to highlight that they are probably more riskier. you're putting more sort of eggs in one basket essentially. But when looking at a company, the main things to look at, I would say, are again, what the company is, what it stands for, what its values are, what it delivers, what services and products. I'd also put a big, I'd put a lot of my time personally into assessing financial statements and looking at the balance sheet. I think the financials of a company can tell a lot about it. It doesn't give you the complete story, but it gives you a good idea of how the company is performing. And again, I would look at the individual company. So I'd look at its competitors. I would look at its room for growth. I would look at how innovative the company is itself. But these are things I'd look for long term, if that makes sense. So I'd look for these things in companies if I was going to invest long term. I know people do invest in companies for the short term. Some people like to call it trading, but in terms of long term strategies for investing in companies, I would like to see an innovative company, one that is growing, one that has room for growth, that's in a sector where it can keep growing, a sector that's not too doesn't have too many competitors, and yeah, I'd just say a company that you feel that you believe in. Really, I think the belief is probably the most important thing. If you can believe in an investment, then you sort of won most of the battle, I believe.
Okay, so I mean, when you're investing in these individual companies and in the index funds, a lot of people sort of hear about when you invest, you're making money work for you, and dividends, and getting this amount of money coming into your bank account every month or every year or whatever. How does that work? Do you get that from both index funds and from individual stocks? Do you get it only on specific ones, depending? How do you make money off these investments that you're putting in?
Yeah, that's a very good question. So with index funds and stocks, a lot of index funds and stocks pay dividends. Not all of them do, but a lot of them do, and they are paid sporadically, if I'm honest. Some pay quarterly, some pay twice a year, some pay once a month. So it really does range when the dividends are paid. So dividend income is a form of passive income, and passive income is income that you don't have to work for, essentially. But another form of passive income that is related to index funds and stocks is the capital growth. So this is actually how much the asset has risen by, let's say, in a year, 2, 3, 4 years. And that is a form of passive income. So not only are you getting dividend income when investing, you're getting the capital growth income, which index funds, stocks, lots of them do provide, well, they should be providing. In an ideal world, all of your investments will rise. So
in an ideal world, yeah, exactly.
All of them should be producing capital growth.
Yeah. So all these sort of dividends going back into your wallet on the account, or are they going straight into your bank account?
Yeah, so that's another good question. I think with some index funds, you can actually choose to have them reinvest their dividends into the fund itself, if that makes sense. But there are some which pay you the actual money into your investment account, and it just goes in there as cash. And then, yeah, I assume with sort of more private investments, you could probably get the money directly straight sent into your bank account. But my advice would be to always try and invest dividends and reinvest the dividend income if you want to maximize your returns.
100%. That's what I do as well. I think one of the keys sort of you mentioned earlier was about long term. I think that's the key. Is a lot of us sort of hear about, oh, so and so made however many thousands of pounds by investing in this or whatever. When you're thinking about investing, for the common person, investing long term is the only way, essentially. I can't remember what the statistic is, but it's something like index funds. Investing in an index fund is better than what 90-something% of people who invest, or what 90% of experts who invest in individual stocks end up making. So you make more money by investing in an index fund, just basically shoving in, barely having to do any research after you've done the research on the index funds once, and then letting it grow for 15, 20, 10, 20, whatever years. compared to experts again, who every single day they're doing all this research, trying to get on top of the market, trying to predict the market, and basically they end up getting outperformed by something that's very easy, a lot more simple, and a lot less stress, which I think a lot of people forget as well, because people think, oh, I just want to make loads of money. Oh, well, if I invest in individual stocks and try and predict the market, I can make more money. But you're going to end up spending so much more time. You're going to end up getting so much more stress. Is it really worth it? Probably not. You could make a little less money, potentially more money, and have less stress, and have more time, which I always think is quite interesting to talk about, especially because a lot of people are with crypto. A lot of people talk about sort of, oh well, it's a quick way to make money. It's not. You got to spend the time, and I think that's sort of what my next question is. We've spoken so much about or invest in this, and you can invest in that and whatever, but there's always a bit of volatility. Well, there's always risk. Every sort of advert about investing will always talk about your capital is always at risk, blah 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 blah. For someone that's again new to investing, why should they invest then? They could just put it in their bank account and it's safe. It's not going anywhere.
Yeah, no, that's a good point. That is a very good point. A lot of people, I think, are put off by the risk involved with investing, which is why people tend to stay away from it. But the risk is in the short term, in my opinion. And there was a study, I think, by Vanguard, I think it was last year or the year before, which basically said that if you invest for the long term, if you invest 20 years plus, you have a 99.9% chance of making money, of gaining from your investment, which obviously doesn't quite bode well with people's view that the stock market is risky. It's only risky in the short term if you're not willing to sort of wait it out. If you're investing in something for the long term, but you're trying to look at it with a short-term perspective, you're going to see that it's down, or it's not performing as well as you thought it might. And that's sort of where the money really is made in the stock market, though, because people will sell, people will buy and then sell, but the people who buy and hold are the ones that always come out on top. And yeah, long-term investing always beats short-term investing, or trading, as I like to call it.
Yeah, I found it quite funny because I know a few people that saw they basically bought into crypto just because they saw a few TikToks on it, or saw it on Twitter and that, and then they pulled out straight away, like as in when it went down. And I said, so how much you make? Oh, they were like, oh, I lost like 50 quid, so I didn't lose that much. Then I was thinking, well, if you've already lost 50 quid, you might. The whole point of it is to stay in. There's no point in you coming out. You just stay in and hold it for the long term. And they're like, oh man, like, what if I lost like 200, 300 quid? But that's because you're thinking about what's going to happen in a year's time. It's a patient game. And I think especially with the younger generation, and I am, we're both part of the younger generation, patience is sort of something that isn't as common as it probably was back in the days. And so we need to have this sort of patience of, 20 years. So think about it like this: in 20 years, you are potentially guaranteed extra money if you just hold on to the investment. And that money, when you end up putting it into a bank account, it's safe, but it's constantly decreasing because of inflation. So could you talk a bit more about that, Jordan? Because I feel like you know more about that.
Yeah, definitely. So right now, people may or may not know, but bank account interest rates and interest rates in particular, are at all-time lows. So right now they are sort of below. I mean, if you go to your bank account, you'll be lucky to get above 1% interest rate for the year. That's quite stark comparing to interest rates from sort of 10 years ago, where I think they were like 5%. Now you're looking at less than 1%. And that is in line with inflation, which has been going the opposite way. So inflation is the rate at which products and services increase every year. So the Bank of England sets this target. It's currently 2%, but it could go up given the year we've just had and the financial crisis all around the world, to be honest. But that number is probably set to rise. It's currently at 2%. But while inflation is at 2%, and interest rates of bank accounts are lower than that, and much lower than that. So in some cases they're sort of 0.05. I think I've seen some
ridiculously low.
Yeah, exactly. So if you're looking to save money in a bank account that's earning that interest rate anything less than 2%, basically, you are not beating inflation year in, year out. So inflation, the rate of inflation is higher than the interest rate on your bank account, which essentially means that your money is losing value each year. It's decreasing in value. And yeah, the only way around it right now is to invest your money. Otherwise, you're going to be seriously losing money. Now, obviously, I would say only invest for the long term. So any sort of short-term pockets of money you've got for short-term expenses, an emergency fund, I would encourage people to keep that probably in cash or in a bank account. But if you're saving money for the long term, always get it invested, because right now inflation is going up and interest rates are going down. So the money is decreasing by even bigger amounts currently.
Yeah, exactly. Like, I think that's one of the things that people often forget. I think that's why there's this mentality of the investing is always too risky, because like you were saying, like 20 years ago or so, interest rates on banks were 5%, which is like amazing. So you might as well put it in a bank account because it's 5%. If there's no risk, guaranteed 5%. And if you go into, obviously back then it was harder to get into investing. There's a lot less access to resources. So all of that sort of is put together. That's probably why we've been taught by our parents, they're not really to blame, but we've been taught by previous generations that, oh, it's really risky. But now we've almost been backed into a corner, and we almost have to or risk basically our bank account or our money going down rather than going up every year. Like, it's going down by, well, let's assume inflation is 3%, and you're getting a 0.5%, which is actually pretty good interest rate right now. A 0.5% interest rate, a pretty good. That's 0.5%. That means your money is 2.5%. It's decreasing by 2.5% every year. It's not worth it. You're already losing money. You might as well invest some of it in the stock market. Or index funds or whatever. That was my sort of thinking about it when I started investing, because I was like, oh crap, I'm losing money, man. And I want to be making money. I don't want to be losing it. You mentioned that again. You spoke about sort of the interest rates are going down, inflation is going up, and the reason being, we're in a pandemic. We're going to hit a recession if we're not already in a recession, I guess. Is it a safe time to invest? Because you said now's sort of the best time to be investing, because we've not really got. Well, I said we've not really got a choice because we've been backed into corner because of the situation, but is it a safe time to be investing, with everything going on, a recession, potentially the worst recession ever about to occur? What are your thoughts on the timing of investing right now? Hello? You there? You gone? Hello?
Yeah, sorry, I just dropped out again.
Okay,
what was the question again? Sorry.
So I was just asking about your thoughts on investing right now, considering we're in a pandemic, we're probably going to hit a recession. Is it a smart idea to invest?
Yeah, good idea. Good question. So I would say, given what we've just spoken about inflation, about interest rates, I would say right now is probably the best time within the past sort of 50 years to start investing. As I said, right now your money is losing value in a bank account, which is unlike previous years. 20, 30 years ago, that would have been unheard of. But right now, your money is decreasing in value. So investing has sort of become fundamental to building wealth. And if you're someone who wants to sort of save for retirement, you're not going to be able to do that in a bank account, unfortunately, given the fact that it is decreasing every year. The only way to sort of protect your income, to protect your savings, and grow your savings is to invest them. That's the only way to beat inflation right now, is to invest. And I would say right now, given the technology, given the ease of access we have, I've got my portfolio on my phone, for instance. Technology has made it so much easier for us to get started, and apps like Trading 2 and 2 and Free Trade, with letting us just put £1 letting us just deposit £1, I think has helped massively in trying to get more people involved in investing. So I would say now is the perfect time. Well, they always say yesterday was the best time to invest, but today is the second best day to invest. So get invested.
True though. Anyone that's ever invested will tell you, and this is based on sort of books and podcasts and whatever, they will tell you I should have invested earlier. We spoke about it earlier as well, like as in everyone is always talking about investing earlier. So now's the best sort of time to invest. And genuinely, when you do start, you get hooked because you want to see that number on the app or the website go up, as in terms of how much money you're putting in. You're scrambling all your cash together. You're pumping in and shoving it and be like, here, take it, make more money, because you're begging for it to go up and up. And it's not doing that in a bank account. Yeah, I'm getting what, £1 at the end of the year, like from my bank. I'm like, thanks. I gave you all my money. You give me £1 back. I might as well put it in an index fund.
And the funny thing is, the banks will invest your money on behalf of you. If you go and see your money at a bank account, they will actually take that money and utilize that money to make more money, essentially. And they'll invest it in, I don't know, whatever they like to invest in. But yeah, so you save money with the bank and they'll invest it for you, but then give you a rubbish interest rate back. So it really doesn't make sense.
So many people, when I made that realization, right, I was thinking, oh my days, man, how we never taught this? And there's obviously a reason why we're not taught this, because they, the system, whoever you want to call it, I know it sounds like a bit of a conspiracy theory, but they don't want us to know about this, right? They don't want us to know that they are quite literally, that's how banks work. Or we give them our money, right? Our money, when we put that in, that is all we're essentially giving it. It's not putting a specific box like Harry Potter, putting one of that chamber or whatever, or whatever it is called. I don't know if you've ever watched Harry Potter. You know that massive vault, the vaults, right? The vaults. Yeah, you know, like where Harry Potter's gold is put in there or something, or whatever.
Gringotts.
Yeah, Gringotts. That's it. Yeah, it's not like that. That money, it might look like it on your app, but that's just a number. Someone's just sat there, it's just been typed up. It's just a number, right? The actual money has already gone to some other investment, so they're already investing it, and they're giving you not even they're giving you 1%, or 1%, 0.5% of what they've actually made, right? So if they're going to invest it, you might as well invest it yourself, right? And honestly, when you realize this sort of stuff, you go, what am I doing with my life? That I'm giving these lot of money and they're investing my money without giving me any of the money. It doesn't make sense, and it frustrates me because obviously we don't get taught this. But the reason why we don't get taught this is a million different reasons. But because obviously, the bankers are in charge of the country and whatever. There's conspiracy theories, but you get
there are financial advantages to us not knowing about this. I think for the banks and for the government, probably.
Exactly, there are, and a lot of these ministers, these people that are in charge, have either worked in banks and been head of banks in the past, and had prominent roles in banks. So, for example, the former chancellor I can't remember what the current chancellor does, but the former chancellor of the Exchequer, who is the second most powerful person in the country, was a leading figure in Deutsche Bank at one point. So these people are in our sort of political spheres, and behind the scenes as well, these politicians get money from somewhere, and a lot of the money is given by banks as well. Bankers are funding the way our country is run, and that's probably why they don't want you to know about investing and things like that. But I mean,
and that's where the 2008 financial crisis stemmed from. Was the government bailing out the banks essentially? So there's a historic relationship between the government and the banks.
Exactly. Well, this thing, it's we, again, like I said, we never, again, as someone that sort of is into sort of politics and the news and whatever, I always used to hear the term about the crash in '08. There would be nothing that explained the crash. It would just be said, oh, blah 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 happened because of the crash in '08. Well, what's the crash in '08? You're not teaching me. The fact that it's not in any sort of business what's it called, curriculum in school. I was never taught about the crash in '08. I had to actually go to my business teacher and go, what was the crash in '08 then? Why is everyone talking about it? How did that happen, right? Like, it was never explained to me, because the schools would never explain it. Why would they? Why would the curriculum explain it? Because because they wouldn't, because like you said, there's been huge links with government and banks before. When they say bankers and all that sort of stuff, honestly, when you start doing the research, just like investing, when you actually when you get interested in it, you end up saving more money, you end up investing more money, you end up learning so much more about the way the world works, the way banks work, which is quite depressing sometimes. But when you start thinking how much money you could potentially make by investing, you go, you know what, it's actually pretty decent. If I invest in 20 years, I got a 90% chance of making something. That's pretty good, making a lot as well, which is always sort of good. I've only got a few more questions. One of them is about sort of, I know you're not really in the position because you've obviously worked for a few years as well. But when you're sort of a student, you're obviously, and you might be as well. You might be sort of struggling. I don't know your financial situation, but when you're young, and maybe you just started working or whatever, or maybe you are working full time, or maybe you've not got a job at all or whatever. Actually, no, if you've not got a job at all, do not start investing. But my question is to you is, how do you go about sort of consistently investing and making sure that you have enough money to invest and also, live your life as well? Like, how are you figuring out what's the most efficient way to do that, to make sure that money is consistently going in?
Yeah, it's a very good question. So I think firstly, establishing some sort of budget would help. Maybe looking at your future income, looking at your current expenses, and sort of ascertaining what's left at the end of each month. That will then put you in a position to be able to commit to automating a specific amount each month. So try and find a number that works for you, whether that be £10 a month, £100 a month, £1,000 a month. Find a number that works for you and try and get consistent with it. Automation is the most effective way to fund your bank account and to fund your investment account, I believe. It takes away the thinking process behind it. Essentially, you're just throwing money into it. You're doing something consistently in a disciplined format, and you're getting your money into your investment account, which essentially will grow in years to come. So yeah, budgeting and then automating a comfortable amount. But then if you like to work to a zero-based budget, or if you like to try and use up your money essentially and try and leave yourself with just a pot to play with, you might want to try and invest little bits on top of it's hard to explain, but what I do now is, so I automate my investments. I have a specific amount going in every month, but on top of that, I'll try and look for little pockets of money that I can invest on top additionally, just to try and, just to try and get the pot a little bit bigger, because the bigger it is, the bigger it grows. So yeah, budgeting and automation, I'd say, are key to being able to fund your investments.
Yeah, I think the key sort of is that there's different ways to do it, but like you said, I think the best way, and I do the exact same as what you just said. I worked out sort of what my living expenses were. I worked out how much I was making and how much I was spending, and then basically I have an automated amount that I put in every month that automatically does it, so I don't ever see that money. And then I also put in any additional amount that I go, I'll put this in, I'll put that in. So that it means that there's always a minimum of a particular amount that is going every single month regardless, because I know with what's remaining I can still survive on food, accommodation, etc., etc. I can still work on that. And I think that's the key thing. I think if I didn't have an automated system, I don't think I'd have more than a couple of quid inside investments. I think the I think because it's automated and me not knowing about it, I think that helps. Because I mean, I use Vanguard, so I would have been forced to invest £500. I think it was £500. The initial, it might be actually 1,000. No, I think it was like
500. Yeah,
I think, yeah. To start, so I didn't even know about free trade because I wasn't very familiar with them. But I knew Vanguard was a very popular stockbroker. What was I saying? Yeah. So I was forced to invest a lot, and Vanguard also forces you to have a direct debit every single month as well. So wait, does it? Maybe it doesn't. No, I'm sure it does. I think it does. I can't remember now, but I know that at the time I thought it did. So I ended up setting one up, and because I set one up, it just does it quite automatically, and it does it it does it the day after I get paid. So I never ever see that money, and essentially I never have that money almost, which is the best thing, because it's like, so let's say for example in the month I got paid £300 from Morrison's. The next day that money's already gone. So I never actually see my bank account with £300. I'll only ever see it with whatever, you know, I invest in every single month, if you know what I mean. And it's the best way to do it. Automate it, honestly. That I would say that's my biggest tip, is get it automated so that it happens automatically and you'll never even think about it. And honestly, before you know it, you'll be like, oh, I got a decent amount of money here. And it's the best feeling in the world.
Definitely. And it's not, when people think they're investing, they think that they're just sort of throwing money away and just trying to forget about the money. But as I said before, with technology and with the ease of access we have now, your portfolio is easily accessible from an internet device. So you can go on and check what your investments are looking like. I wouldn't advise doing it too much because it can become quite tedious, but definitely reviewing your investment portfolio and just checking how much your account is going up by can obviously be good motivation and can sort of reaffirm the belief that you had initially of why you chose to invest. So I think, it's good to try, and I think a lot of people track their net worth as well. So it's good to sort of use it for those sort of reasons, and just to be able to see what's happening, because you want to know that you're growing the money essentially. And yeah, it's not devaluing in a bank account.
Well, see, it's weird that you said that it becomes quite tedious to do it all the time. I do it all the time. I do it every single day. So I have sort of almost a routine of doing it once a day, on sort of all my accounts, and I'll check them out every single. Usually before I go to bed, I'll normally check them out. Just do a quick sort of look, and that keeps me motivated. Whilst for other people, I think, because I've gone into it now going, okay, I'm in here for the next 20 to 30 years. So I'm thinking really long term here. I'm thinking 20 to 30 years I'm here for. I'm expecting first 15 years, I'm expecting it to go down essentially. Every single day before I open the app, I'm thinking it's going down. If it goes up, then it's just a little bonus. But I'm expecting it to go down for the first 15 years. That's my mindset. And I feel like when you have that mindset, when you see it and you go, oh, it's gone up. And it's sort of gone up since I started investing, it's gone up by like 6%, which is more than where it would have in the bank, a lot more than in the bank. And with inflation, and bearing in mind it's right at the beginning, in a few more years it'll be more than 6%, a lot more than 6%, hopefully. And again, it's sort of, you're experimenting here and there, but like you said, it's about how a lot of people feel like they're throwing money away. It's so easy now because you can literally just go on the app and sell if you want. Within about 5 minutes you'll have sold everything, get all your money back, and more potentially, or less, depending on when you sell. And yeah, my final sort of question to you, or my two final questions. How would you go about sort of learning about investing then? So obviously after this podcast, you've watched this podcast, or you listen to this podcast, you know loads about investing, a load more than you originally knew. Then you check out Jordan's social media pages because they're brilliant. They're one of the reasons why I like them so much is because they're UK based. It is very hard to find, or at least for me so far, is UK based resources. People are talking about 401ks in America, and I'm thinking, what the hell's a 401k, and why do they keep talking about it? And it takes ages, because when you try and convert it to English terms, I get so confused when Americans start telling me about invest, or when American YouTubers talk about investing, because I'm like, I don't know what any of these words mean, and then they start talking about dollars and whatever, and it's just a load of rubbish. That's why I was such a fan of your page when I first saw it, and I didn't know you had a TikTok, so I'll definitely follow you on there as well.
Cool.
Yeah, so you've listened or watched this podcast, you've gone and followed all of Jordan's pages. Where else are you going about learning about investing? How have you learned about investing so far?
Yeah, so I'd say it depends on the type of person and the type of learner that you are. I would encourage people to read books, and read articles, and just, I think in the investing world, books are sort of highly sought of. They're seen as this amazing financial asset that can really help you educate yourself. But for me, I'm more of a visual learner. So I learned so much through YouTube. I'd say I'd learned probably 95% of what I know now through YouTube, probably just watching somebody talk in front of a screen. just something basic. But that really helped me learn a lot about investing. And there are lots of different investment accounts out there. There are some good ones in the UK. Big shout out to Making Money Simple. I watch a lot of his stuff. He's from the UK. But there are also some US based ones, which I do like to watch. As you already picked up on, there's a lot more US based content around investing already. And a lot of that, to be honest, was the reason why I got involved in investing, and then why I started my page as a UK based investment advice service, essentially. But yeah, so YouTube, books, speaking to people who've actually invested, and just getting their sort of opinion and how they've experienced the process. But also trying it for yourself. I think that was the main driver for me. I mean, once you actually give it a go, if you just decide to put, I don't know, £10 in, 20 quid in, and just sort of experience it for yourself, maybe split it amongst a range of different investments and just get a feel of it. I think that way also works well. But yeah, my biggest instrument, I'd say, was YouTube.
So yeah, again, I think I'd say I read maybe 2 books, I would say, and I'd recommend. His name's Ramit Sethi. His book, I Will Teach You How to Be Rich. It sounds like it's a get rich quick scheme, but it is very interesting. So I'd recommend reading that. And like you said, YouTube, and it was actually I know I complained about it, but it was actually the American sort of investing pages and YouTube channels that got me first into it. And then eventually I did my sort of own research. But sort of following your page, what did you say it was called? Make Money Matter or something?
So there's a YouTube channel that I follow called Making Money Simple.
Making Money Simple, right? I'll check that one out. I don't think I've and that's UK based as well, yeah.
Yeah. He's got an Instagram account as well.
Okay.
Called Money Simple. But yeah, really good.
Yeah, right. Well, I'll definitely check him out as well then, because I think it's important to have, especially with the situation that we're in right now, just important to know more about investing. And I think there's a huge danger, especially with what happened with Football Index. And I want to quickly touch on that actually before we finish, because Football Index, I remember this was a few years ago now. I think it was a few years ago when I first saw Football Index, and it was basically Football Index was, a chance to invest in players almost, in football players, and if they did well, then their value rose, and you'd get money out of it. If they didn't, then whatever. And then they ended up going completely shut down. Could you tell us a bit more about that, Jordan, before we finish off?
Yeah, so I don't know too much about it in terms of how people experienced it, but I understand the Football Index to be essentially it was operating under, well, the Football Index, as you picked up on, it basically meant that you could buy players at a value and then sell them in the future, and their value would go up or down based on performance. But there was no sort of intrinsic value linked to the players. The company, it was deemed as the football stock market, but it was far from it. It was essentially, I don't know how to use this phrase often, but it was gambling. And as you can see, fast forward, I think it started in 2015, so 6 years on, it's now had its operating licenses suspended, and customers have lost, I think, £70 million in total. So it's gone horribly wrong. But that is another form of gambling, and people getting involved when they don't really know too much about why players are going up and down. I mean, I know a couple of people that did put some money in right at the start, but they also took the money quite quickly out of it. So I don't know anyone who's actually sort of fallen victim to it shutting down, essentially. But yeah, a pretty big gamble. It was just a pretty big gamble.
I think with Football Index, I think one of the things that they were doing was I remember when I first saw the advert for it, and I thought, oh well, this could be a good way for me to get into investing. I know a lot about football. I don't know much about investing in other things. This is going to be great. I can make loads of money. And thankfully, I never did, because I wasn't proactive in doing it. But I think one of the things that they were almost targeting was, well, there's so many people out there that know about football compared to knowing about investing, who almost use that to get them to invest, or so-called invest in quotation marks, into these players. and it never really made sense. And I ended up doing a little bit of research. I've not done a lot on it, on the way it worked, and basically it was dodgy from the get-go. You were never really investing in these players. It was essentially all just gambling. It didn't make sense how because when you invest in a stock or in an index fund, you are essentially investing in a company or in a range of companies. So that makes sense. So you have like a 0.00001% of that company, right?
You can see where your money is going essentially.
Yeah, exactly. When you buy when you were buying players on Football Index, you didn't actually own 0.00001% of Ronaldo. Because there was no official thing about it. If that was the case, it would be everywhere. You'd have all these randomers owning Ronaldo. And that it would also mean that when Ronaldo, for example, went to Juventus for 80 million, you would be getting a dividend of that. Because you would have to almost, you know what I mean? And it never made sense. And it was just ridiculously dodgy. And it preys on, I feel like, on young people who want to get into investing but don't know how to, and have been told, oh, make sure you do your research. So they use the phrase, make sure you do your research, and be like, oh, well, I know loads about football. I'll do it on football. And I think that's why it's so important to, well, that's one of the reasons why I wanted to get you on, Jordan, because I saw that you were talking about investing. I really liked your page on Instagram. And again, it seemed like you know what you do, what you were saying, and you quite clearly do know what you're saying. And yeah, that's why I wanted to get you on and hopefully get sort of young people more almost into investing, or at least knowing what investing can do for you. And yeah, that's I don't know if you've got anything else that you'd like to add on, Jordan.
Yeah, no, I think the topic of investing is as I said before, it is stigmatized. But anything we can do to sort of get people involved in investing. I know obviously my page is there to help anyone if they've got any questions about anything to do with investing. But yeah, we just want to try and get more people investing in this country. It is rising, so it is going up. But I think we can do better.
Oh, 100%, especially when you talked about America's statistic with the UK's as well. And I do feel like a bit of, I don't want to make it seem like I'm some like Warren Buffett and I know everything about investing. Because of how much of a taboo subject it is, I always feel like I never mention it to my friends when I talk about, you know, investing ever, because it's still like really taboo. Because I don't want to come across as if like I know what I'm talking about. That's why I always cringe when I see everyone, you know, asking me, "Oh, you invested in TikTok, in crypto?" And I'm like, "What do you know about crypto? Like, realistically, tell me what crypto is, and I'll believe that, you know." They won't be able to tell me what crypto is. They'll be like, "Oh, it's like it's, you know, digital currency, innit?" I'm like, "Right, what does that mean? What do you mean by digital currency?" They're like, "Oh, it's digital currency, innit? It's like, you know, it's digital." They won't ever explain it to me because they don't know. Because they'll see it on social media. TikTok's the worst for it. On these idiots coming out and talking about what they know about or what about certain coins and whatever, and it's just a load of rubbish. And then you see, I don't know if you be keeping up on it, but there's this new one. I think it's called like Tether or something, or X Tether or something. And Tether's the real one actually, because yeah, there is a coin that's called Tether, isn't there?
I've heard about Tether. Yeah, I don't think I've heard of X Tether though.
I think Tether's the real one that like makes sense. And then someone else made another one called X Tether or something like that. And basically, it's nothing to do with the other Tether, right? Which is the legit coin. And instead, it's this fake one that's basically got loads of money back behind it, and loads of celebrities are getting sponsored. I think Kim Kardashian got sponsored by it to promote it. And it's just a load of rubbish. It basically has the generic, oh, we've got blockchain technology, even though all cryptocurrencies have blockchain technology. That's why they're cryptos. And all this other crap about it, and how they've got secure servers. And they basically make it sound fancy when it doesn't even really exist. So there's a huge danger. And I feel like it is, I do feel like I've got a bit of imposter syndrome talking about it. But me and, you know, Jordan, your page itself, it's not telling you about what to invest in. It's just telling you almost the benefits of investing and how to invest, and how there's not enough people almost investing in this country, especially young people. We've got so much time on our hands. You might as well take advantage of it by putting that money away and putting it into some sort of good use, because like we said, putting it in a bank, it's just going to degrade in value.
Exactly. Couldn't put it better myself.
My final question to you, Jordan, is I know you're 25 years old, so it's only a few years back, But what advice would you give to 20-year-olds right now?
In general or investing advice?
A bit of both.
Okay, so in general, I'd say 21-year-old, someone, a young adult, I'd say try and find a skill, try and learn a skill that you can sort of sell and you can promote. I'd also say try and get some sort of stable income behind you, because you will need that for the future. Whatever your goals are, I think if we can all start trying to build wealth from a young age, the earlier you start, the less you have to commit. So the earlier you can start thinking about it, the better it will be for you. And building wealth leads to just, even if you haven't got long-term ambitions to own, I don't know, your own house or to retire early, money problems are real life problems. So if you can eradicate money problems, you can eradicate a lot of life problems. But in terms of investing specifically, I would
Hello? Cut
say
off again. On.
Okay, so, and I'd say for anyone investing at a young age, I'd say to research and get in as early as possible. Time is your best friend when investing. And I know so many investors who are 20, 30, 40 years old who just wish they'd started investing at the bold age of 18. Because as I said, time is an asset and it is your best friend when investing. Time plus money in the investing world is a recipe for building wealth.
Right, and that is it for this week's episode. Again, an episode where I learned a lot, and I hope you learned a lot too about the basics of understanding investing. And hopefully we can do a part 2 and maybe delve deeper into the investing world and personal finance and what have you. Big thanks to Jordan for obviously taking the time to come on. It was the middle of the day, or it is the middle of the day, and I do really appreciate it. And he was such a nice guy as well. We ended up speaking about football afterwards. Hopefully when you're watching this, it is after England have won the Euros. That's going to be an interesting one, isn't it? Because the Euros will be over, I think, when I post this. It should be. I think it is. I can't remember. Yeah, no, it will. The Euros will definitely be over when I post this. So England are currently European champions, right? We're just about to play Germany on the Tuesday, and right now it is Thursday. But we're going to win the Euros. Anyway, I hope you enjoyed it. I hope you learned a lot about investing. Again, this wasn't financial advice, but I do hope you sort of go out there and look at different platforms, maybe play around a bit, like he said, like Jordan said. Put a tenner in, see what you can do, see what it's about, see what the sort of options there are out there, and use the resources out there. There are some amazing resources. I'll link Jordan's social medias down below, and I'll also try and remember to link the make. I can't even remember. I've completely forgot what the name was of the YouTube channel. That wasn't very good. If you remember what the YouTube channel name was that Jordan recommended, please do comment it, because I can't remember right now. I'm gonna have to ask him. But other than that, thank you so much for watching. Make sure you like, comment, and subscribe so you don't miss next week's episode of the podcast. And yeah, thank you so much for watching. Have a great week. Until next time.